In this podcast episode, Jason Lemkin discusses various key points related to scaling a business and achieving significant revenue growth. He emphasizes the importance of reverse engineering a business model to ensure scalability and success. Lemkin draws from his experience as a successful entrepreneur and investor to provide valuable insights for founders and business leaders. Lemkin highlights the significance of having a business model with economies of scale that can generate $300,000 to $400,000 per employee. He explains that this metric is crucial for determining the scalability and sustainability of a company. By achieving this level of revenue per employee, a business can ensure profitability and growth. He contrasts this with the historical trend of lower revenue per employee in the software industry and emphasizes the need to aim for higher efficiency and profitability. Another key point discussed by Lemkin is the importance of introducing a second product when a company reaches around 10,000 customers. He stresses that the second product should be designed to be larger in revenue potential than the first product. This strategy allows a company to diversify its offerings and capture a broader market share. He warns against simply adding product extensions and encourages founders to focus on developing new products that can outperform the initial offering. Lemkin also addresses the challenge of expanding internationally and suggests that around 30% of a company's revenue should come from outside North America. He acknowledges the complexities of entering new markets, but advises founders to pay attention to emerging customer clusters in different regions. By investing in localization and support for international customers, businesses can effectively scale their operations globally. Discussing pricing strategy, Lemkin emphasizes the importance of anchoring pricing around comparable products in the market. He advises founders to research and identify similar products and price their offerings accordingly. By aligning pricing with perceived value and market norms, companies can reduce friction in the sales process and attract customers more effectively. He cautions against underpricing products and suggests that pricing should reflect the value proposition of the business. Lemkin highlights the significance of revenue growth in the early stages of a company's development. He suggests that founders should prioritize removing friction in the sales process to make it easier for customers to sign up, purchase products, and receive support. By constantly seeking ways to streamline operations and enhance user experience, businesses can drive revenue growth and improve customer retention. One of the key challenges Lemkin addresses is achieving 100% net revenue retention. He acknowledges that this can be a daunting task, especially for companies with high churn rates. He emphasizes the importance of product development in addressing churn, as creating products that seamlessly integrate into customers' workflows and add significant value can lead to higher retention rates over time. Lemkin references HubSpot as an example of a company that successfully navigated high churn rates in its early days. He notes that HubSpot's focus on adding value for customers and continuously improving its product offerings contributed to its long-term success. By expanding its product line and enhancing existing features, HubSpot was able to increase customer satisfaction and retention rates, ultimately leading to significant revenue growth. Lemkin shares insights from his experience in the conference business, highlighting the challenges and rewards of running large-scale events. He discusses the financial implications of hosting conferences, such as the significant upfront costs involved in organizing and managing such events. Despite the inherent difficulties of the conference business, Lemkin acknowledges that it can be a profitable venture if managed effectively and scaled over time. The conversation shifts to the success of trade shows and marketplaces, with Lemkin citing examples of companies that have excelled in this space. He discusses the strategic approach taken by some entrepreneurs to create niche-focused trade shows that cater to specific industries and attract both buyers and sellers. By leveraging paid meetings and networking opportunities, these companies have been able to generate substantial revenue and establish themselves as market leaders. Lemkin offers insights into the decision-making process around raising capital and the implications of venture capital funding. He suggests that founders should carefully consider their goals and objectives before seeking investment, as raising significant amounts of capital can lead to higher expectations and pressure for a billion-dollar exit. He advises entrepreneurs to be mindful of the trade-offs involved in raising capital and to assess whether it aligns with their long-term vision for the company. Reflecting on his experiences as an investor, Lemkin emphasizes the importance of stewardship and accountability when managing other people's money. He shares a personal anecdote about a founder who dismissed the significance of investor funds, highlighting the disconnect between some entrepreneurs and the responsibility of safeguarding investor capital. Lemkin underscores the need for integrity, transparency, and a strong sense of responsibility when handling investor funds. Throughout the podcast, Lemkin shares personal anecdotes and lessons learned from his entrepreneurial journey. He reflects on his experiences with previous startups, including Economies, and the challenges he faced in scaling those businesses. Lemkin discusses the decision-making process behind selling a company and the trade-offs involved in pursuing financial freedom versus long-term growth. He also touches on the importance of paying oneself market rate as soon as the business can afford it to avoid burnout and maintain motivation.